Folks, Dan Frio here, the rate update. Today is September 14th, 2021. Got some economic news coming in today. The CPI. Fed really doesn't pay that much attention to it, but it was easing. So don't go away. We're going to talk about that and more next. Okay, so when we talk about housing, the biggest thing comes up is interest rates, mortgage rates, this and that and this and that. So what I want to talk about today is inflation and how that plays an impact on what the Fed's doing. But here's today's CPI number from Rick Santelli. Take it away, Rick.
Yes, Consumer Price Index, probably the most important inflation gauge for the month of August. Headline number up 0.3. That's a tenth lighter than expected. And the 0.5, of course, was one of those numbers that started to creep down with the high water mark was up 0.9. And if we strip out the all-important food and energy, it really moved back down from up 0.3 to only up 1/10. Up 1/10 is the lightest it's been since February. We started out the year at 0. Now let's go to the important year over year. Year over year, CPI up 5.3%, 5.3. That's 1/10 lighter than 5.4, and 5.4, our last look, was the highest year-over-year read since 2008. Finally, if you strip out food and energy, you're left with year-over-year read of up 4%. That follows up 4.3, and that followed up 4.5. That was a June number, and that was the highest in 30 years. So you can definitely see, Becky, that we've eased off, even on the year-over-year, which are still high. And I can actually honestly now use the word transient. What's transient is most likely the effects of the Delta variant that are keeping prices from accelerating faster, among supply chain issues potentially easing. The real question, of course, is when all the dust settles, whether it's 1, 2, 3 years down the road, is that apartment rent going to go back to where it was? Is the price of a car going to go back to where it was? Most don't think so. But the sticker shock of that, well, we'll have to wait and see the effects on the general population when all this passes us by. Back to you.
Hey, Rick, just watching the Dow futures jumping on this. They're now.
Okay, so great job by Rick Santelli explaining a lot of this stuff. And can some of this be transitory? So let me go over this again so you guys get it. All right. If there were at 1.12 million people in forbearance, there's millions and millions and millions of people in student loan deferments. There's a lot of people out there also in that don't have to pay rent. And that keeps getting kicked down the road as well. So if you didn't have a housing payment, you didn't have student loan payments, how much in bills would you have? Let's assume let's say half these people were still working. Okay, so you have this glut of money out there. Would that be a reason maybe the stock market's way up because there's excess money? Just an idea. Would that be a reason why a lot of products are increasing in value? Just might be a reason. Supply demand. Think of supply demand. Now, when we go through a lot of these figures there also is the labor shortage that's pushing up prices. The supply chain is pushing up prices. The shortage of semiconductors, say, for example, on cars. Why are used car sales prices so high? Well, because a lack of new cars being produced because of labor shortage, supply chain issues, and no semiconductors. So there's a lot of reasons behind this. So are we going to see the inflation continue to rally hard? No. I get it out there where you guys are like, Dan, rents aren't going to go anywhere, but up. Okay, I get it. Food prices, they're going to go like this. Okay. Going back to the rental argument, well, if you're that concerned about that, why don't you buy a house today? You might say the houses are inflated, but you're locking in what that payment's going to be at these low rates. Okay. Am I a proponent of you buying right now? Maybe not. I want to see the glut of forbearances start coming into the market. If you're confused with a lot of this, please check some of my past videos. So I explain what the forbearance is doing to the markets and all this other stuff. But why you came here is basically the biggest point I wanted to talk about today is mortgage rates. Tuesdays, we used to do a rate comparison. It was Rate Comparison Tuesdays. It got really difficult because rates that I started finding all over the place were, I'll say, a little deceptive. There was a buddy of mine on YouTube, Jeb, and he's out in San Diego, and he's a realtor, and he posted something yesterday about, mortgage rates at 199. I even clicked it. So good job with that clickbait, bud. But you can't get a 199 rate. Well, unless you want to pay exorbitant amount of fees. So there's a lot of information out there that's just inaccurate. I'll put it that way. So I wanted to have transparency here. I want to show you guys what rates are doing, how we track them, and what the national averages are, so you guys get an idea. But to find out what my rates are, you need to call us or at least apply online, or we got a special feature that just popped up today. And you'll understand what I mean by that in a second. So let's get over the information. Consumer prices posted smaller than expected increase in August. Well, the cool thing is you strip out food and energy because they're so volatile. There was just a 0.01 increase. Okay, I like it. All right. One of the things that we talk about here is the housing bubble, and I try to debunk that. One of these articles that CNBC posted today was there is a housing shortage. Why? And I'm going to go back to it here, and I'll post this link down below. Single-family construction has suffered from severe labor shortages that began well before the pandemic, but was exacerbated by it. Supply chain disruptions in the past year, high building materials, and pandemic-induced demand soared. Okay, so there's a lot of reasons behind that. All right, and also there's a lot of people that were in forbearance that never put their house on the market, and there's probably about 500,000 to 800,000 homes that are probably going to go in the market in the next 3 months. But you came here to figure out what's going on with mortgage rates today. So we follow this right here. This is why people follow me. What's going on with the MBS market? What the MBS market stands for, it's a mortgage-backed security. It's a bond that trades on Wall Street. That's the biggest component or the biggest element of your mortgage rate. Okay, so that's why we follow this. All right, it's like gas, oil prices. How oil reflects what the price of a gallon of gas is going to do. This is going to reflect what mortgage rates are going to do. Okay, so we had a nice little run today. Look at this. So let's go over what I said previously. I said, here's the chart, and I'm expecting us to run up to about a 101.4. Feel free to review my previous videos to validate this information, so I'm not making it up on the fly. We're at 101.38. We're 2/100ths off of where I predicted. Okay, so why am I saying this? Well, there's a lot of data here that I won't bore you with, but let me just explain to you all these lines and stuff like that. Lines going across, called Fibonacci levels. Just what they are. Okay, they go across here, here, and here. Okay, these basically are resistance levels up and down. Think of bumpers when you're playing, bowling. You hit the bumper and you bounce back. So that's basically what these are entailing. Then you have 100, 50, and 25 DMA, day moving averages. Those are represented right in here. Well, look where a lot of this stuff comes into play. Right in this region right there. Okay, that's where a lot of it dissects or intersects. Where's that number put you? 101.4. So that's where we should be trading right now, and I think we're going to get back there. I said when we hit the resistance level right here, it was signs that was resisting, which was phenomenal, and then we had a kickback, and we kicked up pretty quick. Within the last 2 days, we actually went from 101.2 to almost what I predicted at the 101.4. Okay, why is this? Well, the CPI had a lot to do with it today. Yes, the Fed really doesn't watch this precisely, but they pay attention to it. Okay, as you can see, and Rick Santelli went over these numbers with you. I won't go over line by line by line, but he made a great point of that and how a lot of it's starting to calm down a little bit. Let me put it that way. All right, tomorrow we have the import prices and all that. That really shouldn't do anything to us. And then Friday, the other mandate that the Federal Reserve has is full employment. So they monitor jobless claims. How's the jobless claims going? I'm going to predict and go out on a limb today. These numbers are going to start to come in better, meaning more people, or I'll rephrase it this way, less people are going to be filing for claiming job losses. Okay, so that's where that part is. All right, so that's what I'm expecting on Thursday. If this number comes in a little too strong, then you might say, okay, the Fed's going to react, and what are they going to do? They're going to start retracting or tapering back their bond purchases and pushing up rates. All right, let me explain that in a second. today's chart. What did today's chart look like intraday throughout the day? We had the news come out this morning. MBS has spiked and stayed there. Okay, so that's what's going on. As this goes up, rates come down. So let me explain this to you, how this works for the newbies. As this number, in this case, it goes up. I freaked out some people yesterday. I'm going to do it today, see if I can catch anybody out there. As the MBS number goes up, what do we know here? Rates go up. No, they don't. They go down. So give me comments down below. You guys are starting to really interact down there, so it's really cool. So when this number goes up, that means you're paying more for a bond. That means the rate of return or the yield, or in this case, your mortgage rate is coming down. So we love that. Okay, same here. As this number rallied, mortgage rates were coming down. All right, that's what that represents right there. Okay, so that's what's going on right now. Just so you guys know, the Federal Reserve has two mandates. That's why they were put in existence: full employment and price stability. So that's why we watch the employment numbers and the unemployment numbers, and we watch the CPI, the PPI, and all those other numbers to give us a gauge on inflation. Okay, so that's where we are right now. So let's get next to what are today's average rates throughout the country. Those are represented right here. Black Knight sends surveys to mortgage lenders all over the country. We respond, they average out the numbers and put it right here. So this is just to give you guys a gauge on what's going on with rates. Okay, so the 30-year rates across the board, conforming, jumbo, FHA, and VA, they're represented right here. The 1-day, 7-day, and 4-week delta means change. So you can see there's not much of a change that took place, but I'd rather have a down than an up. Okay, so this means 1 basis points equates out to math of 0.01. So basically nothing. When you have parentheses, that means it was dropped. So that means yesterday's rate was 3.07. Today is 3.06 because it dropped 1. You can go all the way back to about a month ago and rates weren't really any different. Okay, so let me just explain kind of these numbers with you and why you really won't see a change until we hit some specific basis points over here. All right, how mortgage rates function is normally, unless you get those teaser rates at like 299 or something like that, they always factor in by the 8th. Okay, so 3.12, so 3.125, 3.25, 3.375, and accordingly. Okay, so this rate, it would depend. Probably some lenders have 3 1/8, some have 299, some have 3 1/4, some might have 2.875, and so forth. That's what this blends into. So you're not going to get a rate at 3.06. You're probably going to get 3 or 3.125 in those areas. What I want to also explain to you guys, this is basically the ultimate. Let me say it's the ultimate rate. Okay, let me explain what I mean by that. When we post a rate, there's probably 15 different factors that go into your rate. Your credit score, how much you put down as a down payment, the term of the loan. There's a whole, is the house a single family home or a fourplex? Things like that. So when we post these numbers, or when Black Knight posts these numbers, they're just just a complete generic, okay? And it's probably, in essence, is a 740 credit score with a $250,000 loan amount and an 80% or less loan to value on a rate and term refinance versus a purchase. If I confused you, that's not my point, but you can get it, how all those elements play a role in your mortgage rate. Okay, so for example, if you're getting a rate at 3.25, there might be a reason for that. You might be pulling out cash. Your credit scores might be a little bit lower. Your loan to value might be a little bit higher. So this just gives you a gauge of where rates are. Okay, so when we post our rates into this system, normally they're asking us those questions, is it a 740 credit score, so forth. So now let's say, for example, you have a 620 credit score with a 90% loan to value. You're sure as heck not going to get 3.06. This just gives you a gauge. I'm trying to let you guys learn on how the economy and all this other stuff affects mortgage rates. To find out your customized rate, please reach out to us. I'm going to show you that here in a minute on how to reach out to us. But I'm a mortgage lender. I'd love to help you guys. If you're in a forbearance, please call us. If you're looking to build a house, buy a house, we have a brand new system coming out next week that's going to be able to give you basically a loan approval within about 4 hours, okay? And then you can go out and comfortably find that house and know when that contract comes in, you're basically good as gold. All right, so we have that coming out next week. I'll do an extensive video on that. But let me get to, if you like what I'm doing, please give me a thumbs up, subscribe down below, hit the bell every time I post a video, you get an alert. How do you find out more about me and my team? Great question. Go to therateupdate.com. I don't know if this feature is going to pop up. We just created this feature. Let me see if I can refresh. And while I'm walking through this, hopefully our new little feature pops up. Okay. But if you want to reach out to us to ask questions, you're more than welcome to apply online. Click right here and fill out the application. It's going to take you about 10 minutes. It's pretty thorough. So, once you're done with that, you'll get an alert from us saying, okay, we're working on your application. Give us a couple hours to get you reviewed, and then we'll reach out to you and call with any questions, concerns you might have, and maybe that we have. All right. The next thing is down here. These are little questionnaires. If you're looking to buy a house, you go through here and you answer about 10 questions. Okay. And it'll help us pinpoint the direction we need to take with you, what kind of loan program you fit into, and all the other stuff. It also might even jingle your memory saying, I never thought of that. Okay. So that's that. How most people are reaching out to us, they're calling us. They're giving us a call at 844-775-LOAN. All right. Or the biggest thing we have is schedule a meeting. So you click here, it'll open up the days and times available for us. You click the day and time that is within your schedule that you can do, but please let us know if you want to do it by phone or by Zoom. So then at that day, at that time, we'll be reaching out to you to answer any and all the questions you have. Shoot, it didn't pop up. It's going to pop up a window saying, what preferred rate are you looking for? Because if for some reason, you don't know if we can get that rate for you today or not, you can plug in your criteria. As soon as that rate hits, we'll be notifying you within minutes to say, hey, that rate's available. Let's get the ball rolling. So that's it for today, guys. I know I compacted a lot within this couple minutes, but I greatly appreciate you guys watching. Thanks for the subscriptions. Thank you guys for reaching out. Also, realtors out there, we got about 5 today. We need realtors all over the country. Here's how this is working. If you're a realtor out there, please reach out to us. We'd like to start a referral program with you. I can't promise it's going to be 1 a month, 2 a month, 10 a month, whatever it's going to be. But we're setting up preferred lender or preferred realtors throughout the country. If we get somebody pre-approved in your area, we'll make sure that we refer it to you. And then we can correspond and work together one-on-one to get them, those clients into a home or the home of their dream. So reach out to me in regards to that. Click down below, email me, call me, however you need to do it. But we would love to hear from you and partner up with you guys. So God bless, guys. Take care. Have a good day. I'll see you tomorrow. Bye-bye.